Hi there, welcome to Keeping Curious. In this video series, we explore some of today's big questions around financial crime and technology with help from experts in the field. I'm Kathryn Peake, and I'm joining you from my remote office at Linkurious. So Linkurious, who's sponsoring this series, offers the next generation of financial crime detection and investigation solutions to teams of analysts and investigators at Global 2000 companies, government agencies, and nonprofit organizations. So let's get to it. Welcome to everyone who's here. Today's hot topic at Keeping Curious is the future of financial crime. So all of us know that financial crime is evolving really quickly. We see fraudsters and money launderers taking advantage of new opportunities and the new methods and technologies that we use to fight back against them. Part of knowing how to react to changing forms of criminality is understanding how those threats are evolving. So here to tackle the subject of the future of financial crime today is Dev Odedra. Dev is an independent anti-money laundering and financial crime expert. He has a long experience managing financial crime risks and doing consulting in the retail, corporate, and investment banking sectors. He's also the founder of the Laundering News, which I highly recommend as a source of AML and financial crime news. So if you're attending live with us today, in the handout section, you'll see links to both the Linkurious website and to the Laundering News, so you can check those out. If you're watching the replay on YouTube, I'll put those in the show notes so you can access them there. So without further ado, I'll say welcome to Dev.
Thank you for having me.
So I'll mention also that the series is about audience participation. Also, we've gotten some great questions ahead of time, but if you have some questions during the discussion, you can put those in the chat and we'll save a couple of minutes at the end for those. Hopefully we'll have time. We have a lot to talk about today, but yeah, please do go ahead and participate and submit your questions via the chat. So thanks again, Deb, for being here. And I want to start out kind of asking you to put financial crime into our current context. We're living through what feels like a really eventful moment. We had the global pandemic. Now there's the war in Ukraine. There's looming global financial troubles. How would you say that our current moment is having an impact on the kind of financial crime threats that we're seeing or that we're likely to see down the road?
Where all these roads have led us to, ultimately, there's a fair amount of economic downturn, and during times like this, people can get desperate. Access to money, loss of jobs, and in that desperation, two things can happen. Number one, they can fall into the hands of criminals. Things like illegal loan sharks, or get involved in money muling activity, and also even other crimes like exploitation, where there's a financial benefit for criminals. But also during more recent times, we've seen the increasing use of technology. People are using more and more technology to access finance, and with that, it ultimately gives criminals more access to more victims as well. So I guess it's twofold. It's the desperation, or the downturn is driving more crime through the exploitation of people. But at the same time, criminals are capitalizing on the increasing use of technology when it comes to accessing and transacting in the financial space as well.
Right. Right. And to that end, we actually had a question from the audience. I'll jump in already and ask you one of those. So about new technology, there was someone who was asking about your thoughts on the evolving presentation of delivery channel risk. So he's saying that industry guidance still talks about face-to-face versus non-face-to-face, and he's saying that it's becoming less relevant, and delivery channel risk is often being conflated with product risk. And asking what your understanding is in this area.
This I don't like to use the word legacy, but as we're seeing, more use of technology and digital when it comes to finance, previously, the non-face-to-face was seen as potentially higher risk because we don't meet the customer. But as the question asks, and more people are using it anyway, and it's kind of blending in to the product offering. But ultimately, the risk is still present from a delivery perspective, purely from my access to finance. But as a product, it is almost it's an inherent risk, I guess, where we're not seeing the people face to face. So to put it simply, yes, I guess there is a blend of product and channel as well, because the channel is becoming the use of of how the product, the digital finance is being accessed as well. So yeah, inherently this will present a higher risk. Whereas before there was a differentiation between the types of products and the channels as well. So I think that the best way to put it is to build in into development of products. The new digital, the sort of financial solution or fintech type products is to build in that risk, is that we're not seeing the person. And I know there was guidance as well during the pandemic in 2020, remote onboarding guidance from, I remember the FCA in the UK put out some guidance as well. I guess the simplest way to put it is to take on board this guidance, but also to think a little bit further in terms of each firm in how it's devising its solutions as well, in order to try and cover off this type of risk. Because as the question asks and as the answer almost agrees with it, there is a blend, and the risk will remain an inherent one, I guess.
So another question I had for you, and I think we're looking at different delivery channels that maybe didn't exist before or that are becoming more prevalent, plus sort of the increase in opportunities for fraudsters with the economic downturn, and we've seen a lot of our contacts at Linkurious, for example, talk about complexity in financial crime. Do you see like money laundering schemes getting more complex or fraud schemes growing more complex? And if so, what do you think is the best way to handle that complexity?
Rather than the word complex, I prefer the word creative. Okay. Criminals are getting creative by virtue that may bring about with it complexities in the schemes as well, I guess. So, but yeah, I prefer the word creative, and I'll explain a little bit why. Thinking conceptually is a human trait, not something that AI has mastered or can pull off yet. As a human, we think conceptually, and when it comes to criminal schemes and things like that, so do criminals as well. They tend to think conceptually when it comes to financial crime, because I guess a lot of the controls that are put in place, they're trying to negate them, they're trying to work their ways around them, and the more controls we're putting in place, the more criminals are having to think more creatively in order to carry on, not only the crimes but connected to financial crime, but also the financial crime and money laundering itself as well. You asked the second point about the best way to handle it. What I would say is following regulation and just trying to comply is not enough, I don't think, because criminals move much faster than regulation and compliance, I always say to peers and colleagues. So one way, I guess, and it doesn't really even involve much financial capital, but it does involve human, thinking as well. So, just like the criminals are thinking conceptually, humans, investigators or compliance staff need to think a little bit more, I guess, as well. And it's the best way to put it is knowing the laws and regulations and compliance is not enough. We need to understand financial crime and the crimes connected to it. And this is an ongoing process as well. So the best way I would say for financial institutions is to make sure your staff are versed not only in the laws and regulations, but also in what is going on in the financial crime world. Because a lot of time, I think, is spent on just complying, and the understanding of these crimes might help us resolve some of the issues in trying to stop them quicker, I guess, than just trying to comply.
So, yeah, I think that last point about compliance itself and in itself is not quite enough. And you know, when financial institutions or other regulated organizations are just going after the compliance, it's not enough. So I was wondering, sort of flows through to the next question I have is, where do you see banks struggling the most when it comes to detecting and preventing and investigating financial crime? Is it a question of technology, human resources, incentives? You mentioned legal frameworks in your last answer. Where do you really see the I don't know if weak spots is the right word, but the biggest vulnerabilities?
I'll be honest, I think it's a little bit of everything. So there's a little bit of technology, a little bit of human resources, a little bit of legal frameworks that we mentioned earlier as well, and obviously data as well. So I'll just pick off a couple. So technology, I guess, you know, there's different technologies that financial institutions use. All of these technologies don't always talk to each other. As well, some of the legacy technology as well, that's a lot of capital has been put into. It can feel like it's hard to let go of, purely because of the amount of money spent on it in either developing it or updating it over the years.
Sure.
But also things like human resources. Sometimes we find that after a large fine, you'll see a lot of focus on bringing in more staff, but once the issues are fixed, the staff will go again. Sometimes with some staff leaving as well, you lose a lot of knowledge and experience as well. And again, another thing I mentioned, data. Sometimes the banks have a lot of data. They have plenty of data. So financial institutions don't want to just pick on banks, let's say. They have a lot of data, but my question is, are we all using all of that data? Because if we look at social media platforms, they capitalize off, literally capitalize off consumer data, whereas banks, financial institutions, they have plenty of customer consumer data, transactional activity. But my question is, are we using all of that fully? From an intelligence source, let's say. And sometimes it's not easy because certain systems don't talk to each other, or sometimes data can be located in different parts of an institution as well.
Sure, you have this issue of data silos.
Yeah, data silos. That's a nice word. I like that, data silos. Yeah. There's a number of things that can pose challenges when it comes to detecting and preventing financial crime. So I hope that gives something to think about there. There's no one thing that we can point it on, I guess. It's a collective of these.
Right, it's a complex problem, so there's no simple solution.
Yeah.
So you're talking about data, and obviously technology is a big component of the fight against financial crime with each financial institution who has their tech stack. Sometimes they're big legacy systems, often with many layers in their detection and prevention stacks. So in the context of evolving financial crime and financial crime schemes that are changing quickly, in your opinion, what's the best way to approach technology? And do you have any advice to put in place a successful AML technology solution?
This is something I've been asked before as well. One simple way I can put this, which might help quickly and simply, is I would say understand the need first, and then look for a solution that meets that need. Sometimes in the haste to find a solution, sometimes what I've seen is a solution is brought on board, and then they're finding the correct use for it in meeting all of the needs. And sometimes it's difficult to alter certain solutions as well, to exactly the spec needed. They might be able to alter most of it once they've bought it, but there might be certain things that are just so nuanced to the institution that the full capability is not there in what they need. So I would say understand the need first, and then look for a solution that can match that need or can be built to that need.
Right. And it sounds like there's a need for a certain degree of flexibility in technology also with, each financial institution, each business having their own needs. You need something that's going to be adaptable.
Yeah. So a lot of solutions do have flexibility in being able to be tailored to the requirements. But sometimes it's a case of a system is needed. And also one other thing, a softer skill, I guess, or a softer factor to factor in is, are the right people involved in, either the analysis or the design, requirements. Sometimes in one instance, I found the financial crime team was the last to be consulted.
Oh, interesting. Okay.
Which posed a challenge because as they saw the system, they saw the limitations of it from unable to assist them, which is what it was originally for.
Mm-hmm.
So they were involved way too late in the process for certain things to be changed or certain things to be implemented to the requirements needed as well. So the people element, I think, is important. Having the right people involved who are not only the users but who understand some of the specific needs that the users might be requiring.
Right, that makes a lot of sense. Right, if you need to establish the problems you're going to fix, you need to talk to the people who are in touch with those problems on a daily basis. So let's see. Jumping around a little bit, but we talked a little bit about regulation earlier, and there are some new regulations that are emerging. So we have the Enablers Act in my home country in the US that targets lawyers and accountants and agents. And in the UK, there's the Economic Crime Bill. So I was curious to know what you think the impact of these laws might be. I know that regulation itself isn't enough, but are these going to change the game a little bit, or what do you think about it?
When it comes to regulation, legislative changes, my view is that there will always be helpful tools. Like we said, they're not the silver bullet, but they can be helpful tools because they do help sometimes close off a potential a weakness or an avenue for criminals. Anything that makes it a little bit more harder for financial crime to be committed, I guess, is welcome. But like I say, these they're not the silver bullets, and they probably won't be the last either. These recent changes for the UK and the US, as more things become problems, then there'll be more changes that are needed, I guess. And I would say another thing to say is that whilst they're welcome, I think sometimes loopholes are found afterwards. Once the changes have been put in. So it's, we have public consultations as well. And if, people in the industry, professionals who are commenting for this legislation, I think it's important for governments to really take on board this information where people are calling out loopholes, because that's the first place the criminals will go. Once you've created a barrier, they're going to be looking for the next area that they can push through to, and the first one will probably be the loophole in there. So again, that's another important factor. I'd say these are welcome tools, legislative changes, not the silver bullets, but it's always important, I guess, to factor in any loopholes. And even if they are factored in and they seem either too difficult to close off, I guess it's still warranted to try and close them off, because otherwise the criminals will go straight towards, they'll gravitate towards that element that they can exploit in the loophole.
Sure. Sure. I mean, I wrote an article earlier this year about money laundering in real estate, and in the U.S. it's a real problem because there are just agents and intermediaries that aren't regulated, and if you're an oligarch who's coming in paying in cash, it's relatively easy to do. You really see examples of these loopholes in different places. So we did have an audience question that's a little bit related because it's kind of looking at the public sector. And he was asking, what are the best practices for how law enforcement and banks or private institutions can work together to combat AML? And maybe if you have some examples of good programs that have been set up.
One of the initiatives that I've been impressed with is something called TMNL, Transaction Monitoring Netherlands. It's an effort by 5 banks in the Netherlands and the Netherlands FIU to work more or less collectively. It's a unique initiative as well, and I think in terms of we always hear the words public-private partnership. Over the last few years, we've seen that word passed around a fair bit or mentioned quite a bit. But I think that's the TMNL initiative. I think that's a good example of that. There's another one as well called AML Bridge as well. I'm not going to remember which region. It's a European region as well.
Yeah.
I'm not going to remember. It might be Estonia or something, but it's around the European region as well. So AML Bridge is another good one as well.
Okay.
But the TMNL is the one that I know a little bit more on, and that's something that caught my attention in recent years because it's an effort by the banks and the Netherlands FIU working more or less as a partnership of sorts, let's say, because the problem is each bank normally, generally banks just, each bank might have a mutual customer, but they're doing their own filing, and these are going in silos to the, to any country's FIU who receives, the suspicious activity reports, for example. But with this, it's more of a joint effort, so they're able to, I guess, spot mutual customers much quickly, spot networks much more quickly because they're working in a much more tighter collaboration. So at the same time, it reduces effort, duplication of effort, shall we say, as well.
Yeah, I'm sure it reduces some blind spots when you can share some of the, not necessarily share some of the data, but see some of the same things that you otherwise were looking at kind of in a tunnel vision kind of way.
Yeah, I think there's been some legislative changes as well, which allows sharing of data under the right conditions under this initiative as well. I hope I'm not mistaken on that, but I'm pretty sure that when I was looking into it, that was one of, because that was one of the first questions that came into my mind in terms of data privacy and protection. But I'm sure there was some sort of legislative change.
Yeah. So we're almost out of time. I'm just going to ask you one last question. It's a bit of a hybrid one. So I was curious to ask you a little bit about crypto because I saw that you launched a new news site called Cyphercrime that covers cryptocurrency, blockchain, Web3, financial crime news. So we talked a lot about crypto crime in our last episode of Keeping Curious when we had Tara Arneson on. But I was wondering how you see virtual assets playing a role in financial crime in the future, especially with kind of the turbulence we've seen in the crypto space. And then we also had an audience member who was asking about the role of blockchain in financial crime investigations.
Yep. In terms of how we're seeing it playing out in financial crime, firstly, there's been a lot of talk following the FTX scandal of a collapse in the crypto virtual asset space. Mm-hmm. We haven't seen the collapse yet, so they haven't gone away. And I guess there may always be a place for financial crime amongst this sector whilst it's still here. Criminals capitalize off all forms of finance. We saw it with things like checks as well, going back many years now. And now this is just a new avenue to continue to exploit and make use of the sector and the offerings within that sector in order to continue financial crime. What was the next question?
Yes, yeah. So we had a fellow who was asking, let's see, I can read it to you. So although with crypto and blockchain, we're now able to ask questions we've never been able to ask before, as we have transparency regarding the transaction. He's asking how we can use transactional information when we're looking at AML questions, financial crime questions.
Okay, yeah.
Basically, like, is the blockchain a good tool for these investigations?
Yes. One reason, many years ago, when I used to do financial investigations in the traditional finance space, even now we still hear follow the money. But when I'm seeing in a typical financial institution, a non-virtual asset one, I'll have my customer I'm looking at, and I'll see money coming in from one source, let's say, and money going out to another source, but I don't know where it goes after that. Whereas when we hear the words follow the money, at least with blockchain analytics, you can follow the money much further with the hops. You can see which wallet it's gone to after that. You can map out a network and see which direction other money's coming and going as well. So it's one of the advantages of that. And I guess the counter to that might be, well, we don't know who the other party is, which is true. We might not know. We'll just see a wallet. But blockchain analytics software providers, they continue to improve. They're spotting wallets that are suspicious, so they're flagging those on their blockchain analytics tools, which is helpful for investigators as well. So I would say with blockchain, yes, we might not know who everyone is in the chain, but we are at least able to follow money a lot. Money, some argue that it's not money, but let's just call it money for now. Yeah. We are able to follow the funds a lot further than we would with the traditional financial world, and we can follow it globally as well. Whereas if I'm in the UK and money's being sent abroad, it gets really difficult to try and find out the who, what, whys, whens further down once it's passed on.
Sure.
Yeah.
All right. So we're about out of time, so I'm going to wrap it up. So thank you so much, Dev. It's been super interesting. Really grateful to have you on. Thank you, everyone, for attending. And we'll plan to have new episodes in the new year, so keep an eye out for those. We'll post those on the Keeping Curious website as soon as they're available for you to sign up. And that's it. Thank you.
Okay. Thank you. Thanks.
Bye.